Hello and welcome to Follow the Money. I'm Raine Musñgi. Join us as we explore the tools and insights you need to jumpstart your financial journey. Donald Trump's return to the global stage is already causing waves. The former president is setting his own rules ahead of the G20 summit, reportedly insisting on direct access to leaders, a break from traditional diplomatic channels. Bloomberg reports Indonesia's President Prabowo Subianto posted to X that Trump welcomed him to call anytime, emphasizing an informal style. This unorthodox approach is sending some G20 leaders like Brazil's Lula scrambling. The meeting will be in Brazil next week, and reports say many leaders are already focused on Trump's plans for higher tariffs and deregulation, while China watches for possible trade war escalation. Meantime, Japan and Saudi Arabia are hoping for quick access to discuss priorities. The diplomatic shift is putting Trump at the center of the world stage once again. The Republican Party is taking a victory lap after Donald Trump's winning sweep last week, securing full GOP control of the presidency, Senate, and House. This trifecta sets Trump up for a swift agenda launch, expected to include deregulation, tax cuts, and border security measures. Observers tell Bloomberg the GOP majorities will also help push judicial and executive nominations, making for a consecutive shift across all branches. But Democrats are warning of a repeal of social safety nets and restrictions on abortion. With the GOP poised to move on tax policy and a regulatory freeze, experts say we could see impacts on healthcare, finance, and more as early as January. The U.S. inflation rate remains high, keeping prices up for the American households and putting pressure on the Federal Reserve to consider further rate hikes. The annual consumer price index rose 2.6% in October, just slightly lower than the 2.4% rate seen a month earlier. Food and gas prices have increased at a time when many Americans are struggling with higher costs in housing and other essential goods. The Fed has already raised interest rates 11 times since March 2022. Now, with uncertainty looming over the holiday season, the Fed must decide if it will impose another hike to slow the economy. Critics argue that raising rates further could hurt job growth and lead to a recession, but the Fed maintains its mandate to control inflation. The U.S. budget deficit is back in the spotlight after soaring to $257 billion in October alone, marking a 60% jump compared to last year. Analysts are sounding the alarm as this rapid deficit rise could add pressure to already high national debt levels. Fueling this jump, officials say, are increased military spending and higher interest costs on debt. Republicans and Democrats remain deeply divided over spending cuts, but Trump's fiscal policies may accelerate action targeting departmental cuts in order to stabilize the federal budget. Elon Musk is once again making waves in the social media landscape. Musk, CEO of X, formerly Twitter, recently sparked controversy over his comments about the platform's future and his thoughts on free speech. X is facing increased competition from Blue Sky, a decentralized platform co-founded by former Twitter CEO Jack Dorsey. The platform has been attracting users seeking fewer restrictions and an alternative to Musk's policies. Musk's remarks on content moderation have reignited debates on free speech, with critics claiming his approach enables misinformation and hate speech, while supporters argue it promotes open dialogue. America's Consumer Financial Protection Bureau could be headed for major restrictions under new GOP leadership. Trump and Republicans are pushing for curbs on the agency's authority, which was established after the 2008 financial crisis to protect consumers from unfair banking practices. Now, with full GOP control of Congress, agency leadership is expecting major changes, including possible budget cuts and reforms. Critics warn this could limit the CFPB's ability to hold banks accountable, while supporters argue it will free financial institutions from over-regulation. The National Labor Relations Board has dealt a major blow to Amazon and other companies using mandatory anti-union meetings. In a landmark decision, the NLRB ruled that these mandatory gatherings, where companies press employees to reject unions, are illegal. Amazon has been under scrutiny for these practices, especially as unionization efforts pick up speed across its warehouses. Employee advocates praised the ruling, saying it helps level the playing field for union supporters. This ruling could pave the way for a shift in unionization efforts nationwide, especially in tech and retail. Nvidia will go before the U.S. Supreme Court in a high-profile case over alleged securities fraud involving crypto mining revenues. Investors accuse the tech giant of misleading them on how much of its revenue came from sales to cryptocurrency miners. Nvidia argues it is not liable, contending the dispute is based on market conditions outside of its control. The Supreme Court's decision in this case could have broad implications for future securities disclosure requirements, especially for tech companies navigating volatile markets. And we'll be back with more news in business and the economy in a moment. Stay on BNC and follow the money. Welcome back on Follow the Money. Japan's Nuclear Regulation Authority has ruled that the Tsuruga nuclear power plant's #2 reactor in Fukui Prefecture does not meet Japan's rigorous safety standards. This decision marks a significant regulatory move as it bars the reactor from restarting due to potential safety risks. The NRA raised concerns over a fault line running directly beneath the reactor, which experts say poses a geological risk. This ruling comes in response to stricter regulations enacted after the 2011 Fukushima disaster, aiming to prevent potential hazards from active faults near nuclear facilities. Japan Atomic Power Company, which operates Tsuruga, contends that the fault line's risk is overestimated and plans to appeal. The Japanese owner of 7-Eleven is said to be considering going private amid a takeover bid of Canadian rival Couche-Tard. Reports say 7&I Holdings is eyeing to buy back its own shares, which would allow the retailer to continue its current management and remove the pressure from shareholders to sell off more of its assets. According to Bloomberg, the company has started looking for banks to fund the management buyout, worth up to 9 trillion yen or $58 billion. 7&I initially rejected Couche-Tard's takeover bid, but the Canadian firm reportedly hiked its offer last month by 22% to about $47 billion. The World Bank has approved a $750 million loan to help the Philippines accelerate its digital transformation. This loan will lower barriers to investment, particularly in the broadband sector, and support financial inclusion through secure digital services and improved payments infrastructure. This loan opens up new opportunities by making digital services more accessible and enabling growth in online transactions. A key goal is to increase fixed broadband connectivity to 35% of households by 2026, up from 25.6% in 2023. This follows a $600 million loan, which was approved by the World Bank in September last year, underlining its commitment to supporting the country's digital future. Nigeria and China have signed a multi-billion-dollar gas deal, marking a huge boost in energy trade between the two countries. Under this agreement, China will provide technological support to help develop Nigeria's natural gas reserves, which are among the largest in Africa. The new deal is expected to significantly increase Nigeria's gas output while providing China with much-needed energy sources. Officials in Nigeria say the deal could create thousands of jobs and attract more foreign investment. The global sales of personal luxury goods are forecast to shrink in 2025 for the first time since the Great Recession. That's according to a Bain consultancy study released Wednesday, and it also says the outlook could worsen if the sector is hit by tariffs promised by U.S. President-elect Donald Trump. Italy's Alta Gamma Association of Luxury Producers told the Associated Press that European brands could end up being super expensive in an already expensive environment. Trump has pledged tariffs of up to 20% on imports, saying it would create factory jobs, shrink the federal deficit, and lower food prices. Now, while the study did not address the possible impact of tariffs, Alta Gamma said the impact on European luxury producers would depend on how the tariffs are implemented on the category, but noted that a dearth of American luxury substitutes may lead to an exemption. Well, toys are not for kids anymore. Retailers around the world are reporting a surge in adults buying children's toys for themselves. Industry experts tell the BBC this trend has been driven by adults looking for nostalgia and escape amid global turmoil. In the US and Europe, sales of board games, plush toys, and art supplies have jumped over the last year. Therapists note that for many adults, these toys provide a sense of comfort and simpler times. This trend is expected to continue into the holiday season, with toy makers introducing more products specifically targeted toward adults. Still on toys for grown-ups, here's a collection that lets people rock out with a dose of cuteness. A popular guitar brand has dropped a line of instruments and gear based on Hello Kitty. Fender has rolled out electric guitars and accessories bearing the likeness of the popular feline. The Hello Kitty Stratocaster comes in two finishes, white and pink. These guitars cost around $499 or roughly 29,000 pesos. There's also a limited edition guitar made by Fender Japan that costs around $2,135. This announcement comes as Hello Kitty, the character, celebrates its 50th anniversary this year. And finally, die-hard comic book fans are likely gonna love having their own Batmobile. And we're not talking about toys here. I mean, the actual real deal. The drivable Batmobile that lets one become Batman himself. This is not the Tumbler, Batman's tank-like ride that took center stage in Christopher Nolan's Dark Knight trilogy. These black tumblers are fully decked out, minus the missile launchers and jet engines. But the owner may have to take out this automobile for a spin on a racetrack, though, and it is not road legal. Only 10 of these iconic machines have been made for sale, and each one could be yours for $3 million. That is it for today's edition of Follow the Money. I'm Raine Musñgi. Thank you so much for watching. Keep it here on BNC, the Bilyonaryo News Channel, always on top.